given as to why they use this servicer over another one. And it was, okay, that's how you bridge the gap. They're just getting what they need. So, and what they want. And that's what I needed. And what I wanted was to figure out how to bridge that gap. And that's essentially what kind of took this off. It was just to make sure that we could be a servicer that's needed and wanted in this space.
Welcome to the Next Level Income Show, where it's our goal to take your income, your investments, and your life to the next level. I'm your host, Chris Larson. If you haven't yet, get a copy of our book for free at our website, nextlevelincome.com. That's www.nextlevelincome.com. Just click on the book link, and I'll even send you a copy if you put your address in. On today's show, we have Shante Duffy, the Director of Business Operations at BIFI Loan Servicing. With over a decade of hands-on experience, Shante has established herself as a seasoned expert in the field. As co-founder of BIFI, Shante played a pivotal role in establishing BIFI as a platform by investors for investors, hence the name BIFI. Assessing the faults and complaints from other investors, Shante was able to incorporate them into how BIFI was structured, with the vision of addressing common pain points caused by the industry standard way of servicing loans so that investors can focus on what they do best and ditch the frustrations. What truly distinguishes Shante is her unwavering passion for fostering growth and authenticity within teams. She actively engages in educating others in the industry, establishing herself as a thought leader and valuable resource for fellow investors. Shante, welcome to the show.
Thank you. Thank you for having me. I'm excited.
Yeah, I'm excited to have you here. I was sharing a little bit about you in the intro, but I would love for you to share a little bit more about your background in the business here with the audience before we get started.
Awesome. Well, I'm Shante Duffy. I am one of the co-founders and the director of operations of BIFI Loan Servicing. I've been servicing industry for a little over a decade now, which is crazy to think about when I say that. I absolutely love servicing, pain points and all. But yeah, I do, and I love it, and I don't really see an end in sight for me on that. So that's me.
Wonderful. How did you get into the business? And just for the audience, we'll talk a little bit about the different types of loans out there, what loan servicing is, kind of why the business exists. For instance, I was buying. This is going back over a decade now. We were buying non-performing notes. And we'd buy the notes and we'd hire them out to a loan servicer. So I don't think a lot of people know, Shante, like what happens after someone gets a loan or after somebody, like for instance, in our situation, buys a loan, like what happens after that process?
I deal with investors who do buy loans. I've been seeing a lot more of seller financed paper coming through as well, which is fun to see. But essentially, every lender's investor needs a servicer to service their loans. That servicer's job is to basically keep the loan in compliance, but everybody kind of knows this as like their company that accepts payments. Yes, that is a major part of what we do, but we also keep your loan in compliance and make sure that we send out statements, late notices, we keep a record of the payments that borrowers are making. We assist with any loss mitigation. Your non-performing loans, someone has to work those. We want to get these borrowers to be performing again. So your servicers usually kind of handle your loan management side of things with the instructions that you provide as a lender. So we work per your instruction and also within the realm of legal actions and things that we're allowed to do and what we're not allowed to do. But that's kind of us in a nutshell. We have a lot more things that go out to any loan that's needed, additional, services and things like that we offer. But naturally, your servicers are responsible for processing your borrower payments, keeping a record of that, and keeping your loan in compliance per federal and state regulations.
Gotcha. So for the audience, for those that aren't familiar, so if I go and I buy a house and I get a mortgage from, let's say one of the big banks that's out there, or maybe it's my local bank, what happens? Like I know sometimes those banks sell off the loans. Sometimes they package them into other things. What's the process? If somebody like actually goes and gets a first loan on their home, what happens after that?
If they go to their natural bank and just, apply for a mortgage, they get a loan, you're now obligated to pay back that loan. When you go to big banks, they usually have their own servicing department. Right. So Bank of America, Wells Fargo, those bigger places, they usually have their own servicing department, and you're now making your mortgage payment to your bank. In the world that I'm in, these are loans that may have been sold by the bank to private investors, to essentially is kind of anybody who has money, to take on that note. That private investor now needs a servicer to do everything that the big bank was doing while the borrower is paying back their mortgage. So when loans get sold, borrowers get notified via a letter from the current
I've had one of
servicer,
those.
letting
Yeah.
them know it's a goodbye letter. And a lot of people get nervous when they see these. Nothing on your loan term changes. It's just where you're making your payment changes. So you might today be payment to one of the big banks, and then someone else bought your loan. Now you're getting a letter that says, oh no, you need your loan payments to start going to BIFI or to any servicer that the lender has chosen. And it's, again, it sounds really scary, but nothing on the loan changes. It's just where you're making the payments and who you're making the payments to.
Yeah, and I think this is a surprise to some people. I've seen this happen. I've seen, I've gone through a mortgage broker before, and they said, "Hey, Chris, don't, you'll probably see we sell our loans, which means we sell them to somebody else. So somebody pays a specific amount of money
Yep.
for that future income stream that they're getting." And this is where, if you look into it, there's primary mortgages, there's secondary mortgages, there's performing notes, and there's non-performing notes. Shante, do you
Yep.
mind breaking down those categories for us?
Yep. So we service all of those. Just to make that clear.
Yeah.
A performing note is basically a loan where the borrower is paying consistently every single month. We're walking to April, they're going to pay for April. A non-performing loan means that the borrower has not been making their payments, especially not consecutively as well. So we see both of those. We see borrowers who'll make a payment in March and then not pay again until August. That falls into the non-performing at this point because they haven't made payments. Senior liens are just first position liens. There's nothing that is of it. That's the only lien and mortgage on that property per se. There are plenty of times though where there's junior liens and secondary liens, and that's just where there's a first mortgage and a second mortgage. They are not always owned by the same person. So this could still be with a big bank, and your second lien could be with a smaller investor that you've never heard of and with a small servicer. That means you have two loan payments though.
Sure.
For the mortgage, for the borrower that's paying these mortgages.
Yeah.
We service both those. A lot of the junior liens that I service are a little bit different. They're not always conventional and just fixed rate. Sometimes they're home equity lines of credits and things like that, where their interest rates constantly change based on the terms of that note. But borrowers have both. Some have one only. Some will pay off the first, and now that second moves into first. It's the order of mortgages that you have on that loan.
Yeah. And so again, if you go out there and you're listening and you're like, well, this is a little foreign to me, you get your primary mortgage and then maybe you get a line of credit, like a home
Yep.
equity line of credit. We saw this especially coming out of the Great Recession. A lot of these notes were non-performing. Home prices
Mm-hmm.
went down. People got upside down. They just stopped paying for various reasons. Why would, this would be surprising to people. Why would an investor want to buy a non-performing note? So this is a loan where someone
That is
stopped
not
paying
paying.
and I'm going to pay money as an investor for that?
There's a few different reasons. There's reasons why borrowers also stop paying. I know that I like not myself. I like looking at non-performing loans because I either want to work something out with the borrower. Sometimes it's just there's no communication and no one's put in the effort. Um,
Or maybe somebody
to
died or something
Yep,
happened and there was,
anything can
yeah,
happen,
yeah.
but the flip side to it is I know a lot of lenders that look for non-performing notes because their intent is to property, not accepting monthly mortgage payments for 10, 20, 30 years.
Okay, so
They
let's
want the
let's let's
property.
stop there
Hmm.
for a second. So you're saying an investor may buy a non-performing note with the intent of
To
foreclosing on the
foreclose.
property.
Yep. Which means that if no one bids at the date of sale, the date of auction, that property becomes an REO, which means that it stays with the investor. The borrower
Mhm.
no longer has any obligations to pay back the note because they were foreclosed on. They also just lost their home.
Mhm.
At that point, investors can turn around and sell the property as is. They can choose to fix and flip it. I've seen that a lot. Or they just kind of put a renter in there, a tenant, and they just kind of get a property management company. It's different variations. When you're buying notes, you need to kind of plan with your exit strategy as lender as to what you want to do. So when you're looking at notes, you're like, okay, this one's non-performing. There's several different exit strategies you can take. You don't want it to stay non-performing. Buy a non-performing note to just do nothing with forever. You have to eventually do
Yeah.
something before statute of limitations comes into play and things like that. So the intent is more so what the exit strategy that you would want to take as a lender, what exit you'd want to take. And you have several different options. So for fun, they do require a little bit more work, definitely a little more costly on the purchasing it, not on purchasing, on working the loan, and a little less costly on purchasing the note. where performing loans are the opposite. They're a little bit more pricey, but you're getting residual monthly income per the note as well. So there are pros and cons to both sides. It just depends on what everybody likes.
Yeah, so some investors may buy a performing note. They may pay a slight discount to give cash to the seller of that note so that they
Yep.
can get that. And we've seen there was commercials on for years and years. I used to see them on TV when we watch TV with commercials, which it's like people don't
We
really
don't
do
do
that
anymore.
anymore.
Nope.
Yeah, but so if you ever seen like, oh, we'll buy your lottery payments, or we'll buy, it's the same thing. You're paying
Yep.
just like a bond essentially. But non-performing notes are a little bit different. So, and you could buy
Yes.
primary non-performing, you can buy secondary non-performing. What types of discounts are you seeing out there from an investor side? So if you have a note that's, it's got $1 that's owed back, what's typical that you're seeing out there, Shante, in first
I've
and
been
second position
seeing
guys?
on the I haven't seen a lot of non-performings lately.
Hmm,
Just not just as of
it's
recently.
good to
I've
hear.
been
Yeah.
seeing a lot of seller financed that doesn't,
Hmm.
originated brand new paper.
Yeah.
But when I do see people buying non-performing notes, they're also kind of bidding, 50 to 60% of the principal balance.
50 to
That's kind of like
60
a
of the original.
per
Yeah.
of the principal balance, what's currently owed, or the
Principal
full legal
balance, not the
balance.
original. Yeah.
So
Gotcha.
they might owe 100,000. The original mortgage was 300,000,
Gotcha.
but they're paying usually around there. It also depends. There's many factors into it when you're doing your due diligence. If you have buy a non-performing loan with $20,000 in default taxes, you're going to take that into consideration when placing your bid to that seller, because
So
those are
explain
funds
that.
that you
Explain that situation real quick. So you buy a hundred
yeah
thousand dollar principal balance, and there may be back taxes because if somebody's not paying their loan, there are
they're
probably
not
other
paying
things
their
they're not paying.
escrow.
Maybe
Correct.
contractors where there's liens on the property. Maybe they haven't paid their taxes for a year or two. Um, so you are you a high income business owner or professional earning 300,000 or even more a year, but still feel like you're living paycheck to paycheck? Are you comfortable working until you're 65 or 70 to retire? Or do you want to achieve financial independence and live life on your own terms? You could join myself and Matt Ford and learn how we both became financially independent in our early 30s. We will teach you how to make, keep, and grow your money, teaching you strategies to maximize your earnings, keep your income that you've earned through tax strategy and legal structures, and ultimately teach you how to grow it by determining your personal investing strategy, as well as teach you how to analyze investments so you can grow your passive income to the point to live life on your own terms. Our coaching clients reliably do this in 7 years or less. To learn more, check out our coaching program at nextlevelincome.com/coaching. That's nextlevelincome.com/coaching. You have
I
to kind
see a
of look
lot
into
in the
those things.
taxes, and you should always check, because the way that, I always try to make sure newer investors who are a little bit more green and just kind of getting their feet wet or learning, is that when there are delinquent taxes on a property, it is in your best interest to actually pay those, because tax liens will supersede your loan as a lender. So you can have a first lien, a primary mortgage that is non-performing. If the taxes are not current and not paid up to date and there's delinquencies, the tax collector has every right to put those up for tax sale. And
There
which
you
means that
go.
anybody, the same way you could buy notes, anybody can bid on the tax bill that's owed for each year. Now, whoever buys those taxes, they might not always stay with the county or the city, has every state is a little bit different, has a period of time where they give you time to redeem these taxes. Once the redemption period is over, though, whoever bought that tax lien can actually foreclose from a tax lien position, which will wipe out your senior lien mortgage and your junior lien mortgage for
Wow.
in a
Yeah.
lot of the cases. So I always tell everybody, at the very least, doing your due diligence, go check taxes, because I've seen it over and over again, where people don't know, and the next thing you know, it's going through foreclosure, and then these numbers just go up. They accrue interest and penalties, and I live in New Jersey. Taxes are pretty high here, but when I look at loans in like South Carolina, where maybe $1,000 for the whole year,
Yeah.
if you don't pay that for 6 years, you're going to lose a property for 5 grand worth of taxes.
That's crazy.
So
Yeah.
I always tell everybody, just double check and make sure, even if you're in the second position, you want to know that that first lien is in good standing. Usually taxes are part of a mortgage payment. There's an escrow component on a senior lien, majority of the time. And so they have a payment, the borrower will have to pay something towards the principal and interest of a loan, but then they'll have to pay additional to cover taxes, homeowners insurance, sometimes sewer and water bills as well, sometimes an additional insurance. So if a borrower is not paying, especially on their senior lien, where there is an escrow, that means no money's going in to pay these items, which means as a lender, you're probably going to be the one that has to pay that. If you choose not, you don't want to renew insurance, for example, if that property goes up in flames, you have nothing to protect yourself with.
Yeah. So again, so if you're an investor and you're out there and you're buying either portfolios or these notes, the upside is you potentially double your money, but it's really a numbers game. Is that fair to say,
Yep.
Shante?
It's
So
always a numbers game.
yeah, so let's talk about why did you found BiFi?
I founded BiFi because I got into an opportunity where I couldn't say no as much as I tried to. I love servicing. The thing about servicers, and I say this to everybody, nobody likes a servicer, but you need one. That's how it was explained to me years ago when I first stepped into this space. And it bothered me because, like, well, I don't want to just be needed. I want to be wanted. And so it was, how do I bridge that gap? So BIFI actually stands for By Investors for Investors. The founders are investors, and we know what we want to see in our own portfolio. So there's things that we know that we would like that would help our no invest journeys, and we also feel like other investors would benefit and would like these things as well. So we actually sat down with a group of investors that we are all pretty close friends and kind of had like an off the record conversation, and was like, if you could build your own servicer, what did you like? And we got very, very honest feedback. And it was, well, this servicer is really good at this, but they're not good at this. And I figured out why people use different servicers. And just because sometimes their loan situations are different. One servicer might handle bankruptcy better than another. One servicer might not touch non-performing loans and might not offer loss mitigation help to handle the borrower outreach and getting this performing. So there's several different reasons that we kind of were given as to why they use this servicer over another one. And it was, okay, that's how you bridge the gap. They're just getting what they need. So, and what they want. And that's what I needed. And what I wanted was to figure out how to bridge that gap. And that's essentially what kind of took this off. It was just to make sure that we could be a servicer that's needed and wanted in this space.
And let's talk about that. So what are the services you offer that are different than, okay, Bank of America has a mortgage and the payments are coming in regularly. Those aren't really your clients. Is that fair to say?
We have clients like that,
Yeah.
but the Bank of America is not my client. But yeah,
Right.
we have
Yeah.
loans that come in paying and they don't
Yeah.
require much work. It's just we receive a payment, process the payment. Now we're just waiting for the next month. Those loans are beautiful. Everybody's happy with those loans.
Yeah.
It's the non-performing side that I'm not going to say is 100% different than other servicers, because a lot of the services we offer are also offered by other servicers in our space as well.
Yeah.
But we want it to be a one-stop shop. That was what was really important. We didn't want people to feel like they can come to us for certain things and not everything, start to finish, and any exit strategy you're going through, we want to assist with. So we made sure that we built a team that can handle every type of loan and every type of scenario. So we deal with performing loans, which again, those are everybody loves. The non-performing loans, we work with the investors and ask what exit strategies do you want to make available before we just start calling borrowers. We will never offer a borrower any sort of payment arrangement, agreement, anything like that without going through several steps.
Yeah, so let's talk.
Um,
So
yep.
I'm an investor. I come to you. I have a note. Let's talk about some of those exit strategies. So I've bought a note for say 50 cents on the dollar. And
Okay.
I come to BiFi and I say, all right, Shante, you say, all right, what are our options here? What would you like us to work through? Let's talk through some of those for the listeners.
You have the option to just try to get the borrower to fully reinstate, which means to bring their account current. Sometimes it's
Okay.
just no one, it was floating in the abyss. It wasn't with the servicer. They didn't know who to pay.
Yeah.
It happens. It happens more often than you think.
Sure.
So
Yeah.
reinstatement might just be enough. They might be only 3, 4 months behind. Get them to reinstate. Great. Now we're paying. A payoff is everyone's favorite as well. If a borrower just miraculously pay off, that's great. A discounted settlement also works. So let's say the borrower owes $50,000, but they can only pay off 40. You might be okay with that. Say, you know what? I'll call the whole loan paid off if you pay $40,000 by this day. That's an option as well. We get a little bit deeper when we know the borrower had the funds to completely pay off or completely reinstate. Let's say they
Okay.
lost their job, they lost, a divorce. Those happen a lot. Their kids go off to college. Their financial situation changes. So what they could pay 2 years ago, they now can't. We want to send them a financial application and figure out what their finances look like to begin with. Or we could even entertain, we want to put them in a loan modification or maybe a forbearance agreement, something that's temporary and not
Okay.
permanent and doesn't completely modify the loan. We also do trial payment plans, which are very short term, 3 to 6 months at most. Those agreements last for. And again, a lot of it's just, I had surgery and I can't make my payment, but I'm going to go back to work at this point. So
Right.
we want to get as much information from the borrower to then turn around back to you, being a lender, and saying, this is their situation. This is their scenario. Here's their financial application. At the end of every month, this is how much money they kind of have to spend after looking at their car payment and phone bills and everything else that they pay. We ask you, is this a number that you can work with? Are you willing to adjust and work with anything? It's not up to us. To you, it's your loan, it's your investment. So we'll actually work those out. So we share all this information with you. If you say, okay, I'll accept the 300 monthly payment. Awesome. We're going to start drafting an offer letter to the borrower, see if they'll accept that. Once they accept that, we'll generate and create the modification agreement, forbearance agreement, or whatever agreement we landed on, have them execute and sign that and make sure that we reset the loan to reflect these new terms. It doesn't always go that way, though. So that's still a win for both parties involved. And I was always taught win-win solutions, borrowers and lenders. As long as both sides are happy, we're good. Sometimes borrowers just, they don't have the money. They can't actually afford their home, and it leaves them with very little options.
Right.
Instead of going straight to a foreclosure, there are plenty of times where lenders are honest. This borrower can't afford it. We can't work out any arrangement. What if I get them to sign a deed in lieu of foreclosure? So that's the borrower signing the property over without going through the entire legal process of the foreclosure. There's lenders who also do a cash for keys where they feel really bad, things happen.
Yeah.
They might give the borrower some money to have them sign over the property. So
Gotcha.
you still have that deed in lieu signing over. And if all else fails, we then kind of
Yeah.
take the foreclosure route.
Yeah. Yeah, and that's the last option. But so like you said, if somebody can't pay, they're really struggling and you're able to take over a home and you're an investor that understands this process and you've paid a discounted amount for this mortgage, you may really assist them to get out of there without a big stain on their credit score. And then you can take that home and resell it or rent it out or
Create a new
something to
loan
that
on it,
effect.
rent it. Yep.
Yeah. Gotcha.
So we
Yeah.
kind
So
of
it's
cover all of those.
yeah, and again, I think this is surprising to a lot of people to hear that one, you can go and you can buy or sell these mortgages out there on the market. First position, second position, performing, non-performing. I've seen these notes on everything from homes, mobile homes, land, all this stuff that's out
Yep.
there. You can get creative. You can buy a property at a wholesale rate. You can resell it at a retail rate. Then you can sell that note off and create a spread there, which I think is an interesting strategy. And I think you mentioned this, Shante. What we're seeing a lot, especially in our mobile home business, mobile home park business, is that sellers, now that interest rates have gone up, are much more interested in owner financing. Whereas,
Yep.
when rates were 2% and 3% and 4%, people really didn't have that
Chilling.
appetite.
Yep.
Yeah, they're
A
too
lot of
low.
seller finance, a lot of wrap loans or sub twos. Those are what I feel like they've just been blowing up,
Yeah,
which is exciting to see. And,
yeah,
these borrowers are great, brand new loans. They're starting to pay, that's beautiful. So that's just what I've noticed is really popular right now. And then of course, some commercial loans that we've been getting as well. So
yeah.
we do service those too.
Yeah, and it's wild as you see the real estate cycles I've talked about a lot on this show kind of ebb and flow over the years as rates go up, rates go down. Property prices go up, property prices go down. We have expansions and recessions. It's always good to understand the strategies that are out there. Shante,
Yep.
who should give you a call to learn more about what you do at BiFi?
Any investor that generally doesn't know, I love the green investors. I love
Yeah,
watching them grow. I like sharing knowledge and helping. I'm not even saying you have to 100% use BiFi. We're not, 50 state license. So I talk to plenty of investors who have loans in states that I don't service, but they ask a question and actually, how do I go about this? I am all for giving any sort of assistance that I can. If I don't have the answer, I will find someone who does. One thing I want to stress, servicers are not attorneys. We do not give legal advice. That's the one thing I want to stress. I'm an attorney. Do not ask me a legal question. My response to you is going to say you need to talk to an attorney and ask that question. That's where that I feel like that's a little bit of a gray line. Some investors that they kind of expect legal advice when I can't even make decisions on how you handle the loan. It's your choice. I definitely can't provide you with legal advice because I'm not a practicing licensed attorney either. So I always tell people to ask questions. Network is really important. Networking is really, really important. It's about, who you know and just engaging as much as you possibly can. So anyone who just has broad questions, specific questions, any question about loan servicing, I can assist with to the best of my ability. And if I can't, I promise you I will find somebody who can.
Awesome. And what's the best way for listeners to get a hold of you if they want to reach out?
I always tell everybody to email me. You can email me at servicing@bifils.com. You'll get a response from me, and we can always set up. I always like to set up times to talk to people so I can, get their full attention. They're ready and come with your questions. So I just shoot me an email, we'll set something up, and we'll talk.
Awesome, Shante. Shante, thank you so much for sharing more about BIFI with the audience today and being a resource for everyone out there.
Absolutely.
Hey, Chris here again. I hope you found this episode valuable. Now, I have one more thing to gift you. We have a page for my coaching clients where you can get a free copy of my book, as well as much more from previous guests on the show. Just check out nextlevelincome.com/coaching to get a free copy of my book, audiobook, and much more. I'll send you a copy of my book and cover all the shipping costs as a thank you for listening to the podcast. Also, please like, share, and take just 90 seconds to give us a rating on Apple Podcasts.